a smart contract on a network like Hedera or Ethereum or Polygon can actually trigger a buy or sell order in traditional markets. And we haven't seen that done anywhere yet before. Swarm provides the end-to-end infrastructure for bringing securities on-chain. And we have built a decentralized over-the-counter trading platform, fully peer-to-peer, which means you and I can just trade between ourselves without any middlemen. It's smart contract powered, and everything is instantly settled on-chain. Actually, by having tokenized forms, by having a 24/7 liquidity layer or market for these tokens, it means that you're no longer bound by those time restrictions. We can actually create those ETFs ourselves by throwing different types of tokens into an AMM pool, and suddenly you have a brand new trading product. If you were to put tokenized Tesla stock, tokenize Twitter or X, and then Dogecoin into a pool, you have an Elon Musk ETF.
Welcome back, ladies and gentlemen, to the All in Crypto podcast. I am your host, Rupert, and today I am delighted and excited to be introducing our next guest. We've got Katie Evans, the Chief Business Development and Communications Officer over at Swarm. Welcome, Katie. How are you?
Hello, I'm good, thank you. I've just returned from sunny Italy, so feeling very refreshed and ready for this interview.
Katie, really excited to have you on. Certainly given what's kind of happening in the world at large. You know, we've got the SEC coming out and saying they want to kind of enable the digitization and tokenization of markets with the likes of Project Crypto. And in Paul Atkins' own kind of terms, he's talking about a new era for markets. And I think Swarm is very much playing a role in that. And that's really where I want to start, is with Swarm and what it is you guys are doing. So if we could just get a sort of overview of what you guys are undertaking, that would be perfect.
Yeah, of course. So in a nutshell, Swarm provides the end-to-end infrastructure for bringing securities on-chain. So exactly what you just mentioned with Paul Atkins' announcement. We are very much heavily steeped in or ready for Project Crypto to take place and actually manifest now. We've been building this for a few years. So the co-founders of Swarm started off in 2016, 2017, when it was still talking about STOs or stock tokens. Now, obviously, we've evolved. There's a few iterations, and now it's RWAs. RWA is the new acronym. But essentially, we provide three things in bringing those securities on chain. The first is issuance, which a lot of RWA protocols solve for, to be fair. We actually go and procure our instruments from traditional markets. So we deal in public markets at the moment. So think Apple, Tesla, MicroStrategy stock. We'll go and buy those from traditional markets. They're then stored in institutional custody, and then we mint a token to represent those assets. And then that's the token that then moves around in DeFi. And all of our assets are DeFi compatible. We do that across public equities, treasury bonds that yield around 5%, and then gold, so commodities. So that's the issuance side of thing. We've also built then trading infrastructure, which does differentiate us from other RWA protocols. A lot of people have solved for issuance, but then what can you then do with those assets as a result? So now we're focusing on, or have focused on, utility. And we have built a decentralized over-the-counter trading platform, which is a bit of a word salad to say it out loud, but it's fully peer-to-peer, which means you and I can just trade between ourselves without any middlemen. It's smart contract powered, and everything is instantly settled on chain. And then the third thing we have is actually centered around proof of reserve. So obviously that's become like a huge topic for the industry, making sure that what we're trading is exactly what it says it is, and that becomes even more important when you start connecting the traditional markets with the DeFi markets. And what we've built is a completely on-chain, decentralized attestation site called ChainWiki, and that allows anyone to go in, see what sits behind their asset, their token that they're trading in terms of data, and then seeing who has attested to the truth of that data, which is a really important piece.
Yeah, certainly with everything sort of going on and the skepticism behind the cryptocurrency space, for you guys to be able to sort of, in a kind of real time manner, be able to um, locate everything, I think is very important. And there's so many benefits to tokenization, one of which is exactly that. And it's great to see that you guys are really stepping out with that. I think it's very exciting, everything going on. I think there's major unlocks, not just for investors, but also for markets as a whole. That's ultimately why tokenization and the kind of mergings of the traditional financial sector and the crypto space are happening, because it's a major benefit. It's like going digital with things. You know, if you look at record keeping and things like that, it benefited massively. Communication. We're seeing a similar thing for financial markets, and I think Swarm is playing a very important part in that. Katie, what kind of tokenized assets is Swarm currently pursuing? You know, what are some of the equities that you guys are currently offering in tokenized forms before we dive into some of those various components?
Yeah, so we've actually started, conversely from most people in our industry, actually with public markets. I think a lot of people have always touted that the benefits of tokenization is to bring liquidity to illiquid markets.
Yeah.
But the problem with that process is that often those markets that are illiquid is because there is a lack of data that sits behind them that sort of sets out exactly what that asset is. So there's a lack of understanding about the asset and the value of that asset, and then in turn the fair value or the fair price for that asset. Whereas public markets, obviously very well functioning global markets with virtually unlimited liquidity today. And we felt that actually starting with well-known, well-understood assets, like, for example, Tesla, Apple, MicroStrategy, NVIDIA. We've got about 9 on the platform, which kind of all center around crypto and tech, because that's our wheelhouse. We felt that by introducing names like those as tokens first, does half the job for you, because people understand those. So then all we have to do is focus on what are the benefits of having a tokenized version as opposed to just a digital version that sits in your traditional brokerage account.
Fantastic. And that's going to bring us perfectly onto my next question. What are the benefits of tokenization? Why is this happening? And maybe we can break this down into 2 parts. We can perhaps look at the benefits for investors, you know, people like me and you that may want exposure to these assets. And then we can look at also the benefits for the markets at large. And that's going to really open up, I think, an interesting dialect in regards to the kind of evolution that markets are undertaking. But if we can start with investors and some of the benefits that tokenization is bringing to them, that'd be great.
So this is actually a really big question, because the benefits of tokenization will vary depending on who you are, where you sit in the market, and where you sit in the world. So, taking it from a retail perspective, retail investor perspective, you and I, you can judge by our accents. We are from the West, from the UK, and we have thankfully no problem in accessing a brokerage account to go and buy an Apple stock. So and actually a lot of these platforms are offering it commission free as well. So why would I go and buy a tokenized version of that? Well, one thing that you're not able to do, or not able to do so easily unless you have a large amount of capital or margin to back those positions, is actually lending and borrowing against your assets. So when I talk to people in the West, let's call it, I always say that it's what you're able to do with those assets as a result, which is why you would opt for a tokenized version as opposed to going down traditional means. And we've actually seen people sort of experiment with that so far, where they are using these stock tokens or these tokenized RWAs for on-chain collateral. If taking that conversation over, say, to Southern or Central America, it's really difficult if you sit in a country like Brazil to go and trade Apple stocks. it's really, you cannot, it's very difficult to trade, to access the US stock market. You have to set up like an SPV in the US and then start trading out of that. So it's not so easy just to connect, do KYC onto an exchange and then go and buy those assets. So actually, by having tokenized forms, it's actually easier for you to access these assets. And then I'm just going to take you around the world to Asia, where you're looking at a completely different time zone. And if you want to trade these assets, you have to get up at stupid o'clock in which to do that. So by having a 24/7 liquidity layer or market for these tokens, it means that you're no longer bound by those time restrictions. So from a retail investor perspective, it varies widely why you would go for these tokenized versions as opposed to just traditional methods.
And I think all of this stuff, each point that you've touched on there is huge. Certainly for, which is going to bring us onto the kind of market aspect side of things, the markets, really you're unlocking liquidity from around the world. And I think when technologies are introduced, you could look at something like the aeroplane, for example. It opens up the world. And that's kind of what's taking place with the stock markets more broadly at the moment. Of course, you guys are playing a pretty big role in that. It's really nice to see this. We'll talk about how you guys are enabling this, what DLTs you're using in just a second. But there's a kind of, I've always looked at crypto as almost enabling a kind of market boom, as it were, through democratization, we could call it, of these assets. People can now get their hands on them in a 24/7 manner, in a more global manner. And this is all part of, I think, a broader push towards moving towards a global world. It's very much, in my opinion, the direction the world is moving in, and distributed ledgers really fill that gap in very well. What about the markets as a whole? What kind of benefits do you see this bringing for markets? We'll touch on DeFi and how investors can use these to more of a degree in just a second. But what kind of an unlock for markets is this bringing?
Again, it depends which market you're sitting in, right? So I think if you go and speak to sort of institutional investors, one of the key attractive sort of qualities about tokenization is actually ongoing or 24/7 risk management. If you look at sort of markets today, you're bound by certain time zones, certain liquidity sort of sections, if you will, for having to just trade those assets, whereas this enables you to do that on a much larger scale and as the market moves in real time, and we haven't had that benefit before. Secondly, if you're in parts of the market that have traditionally lacked liquidity, then actually tokenization and being able to attribute certain data sources or data full stop to these tokens actually then opens up new possibilities for those markets. For example, when we look at public markets, like take public equities, we're very part of a stock IPOing or company IPOing is that there is a whole prospectus around what is included in that business model. Who are the key players? Who are the key stakeholders? What is it that they're doing? What are the revenue drivers? All of that good stuff. So you've got almost like this set of disclaimers straight away, so you know what that asset is, and it makes it far easier for people to then go and value that asset and then contribute to its price discovery on these public markets. That's not so easy to do when you're looking at private markets. So think privately held funds, think real estate, and actually the size of private markets far outweighs public markets. So tokenization has a real means here to actually open up brand new asset classes, both for retail and institutional investors, and actually tap into value creation, which has not been possible before, or it's only been reserved for, I don't want to say the rich because that sounds too defamatory, but it's only been possible for people who have capital through which to spend on these things, or are part of these large companies that can go and have time and resource to do all this due diligence. We're actually making that far more accessible for other smaller players in the market.
Fantastic. And I think that is perfectly what Paul Atkins means when he says a new era for markets is upon us. The efficiency kind of unlocks with all of this are I think beyond comprehension in regards to what the world may look like once all this stuff has been implemented, we've got a kind of rough idea, but you talk about the markets as they are, they're only going to grow infinitely as a result of this. And you're going to really benefit both sides of things. I think that's very exciting. I really do see a kind of boom, an economic boom perhaps coming on the back end of all of this. I think if you look at perhaps developing nations, there's going to be a major unlock because they're going to be able now to take part in the kind of global stage through this technology. And people perhaps in the West are going to be able to actually invest directly in that. And it's a kind of a really beneficial process that's taking on or being taken on. And
Well, can
do
I
you?
just add to
Yeah,
that
for sure.
actually? Because you kind of touched on it a bit there, this idea around unlocking new things. I think because of the composability, the programmability, and then the subsequent composability of these assets as a result of that is actually going to unlock a lot of new trading products as well. That we won't have to rely on certain companies coming up with a brand new ETF that we can now access. We can actually create those ETFs ourselves by throwing different types of tokens into an AMM pool, and suddenly you have a brand new trading product that people can also add liquidity into. The topic or the example I like to give is that if you were to put tokenized Tesla stock, tokenize Twitter or X, and then Dogecoin into a pool, you have an Elon Musk ETF.
Yep.
So I
Wow.
think it's unlocking those potential new streams and product ideas as well as unlocking, let's call it, liquidity coming into the market too.
I have no doubt that we're going to see a few Elon Musk ETFs. There'll probably be a Warren Buffett. The world of possibilities really does open up. It's, again, I think beyond sort of comprehension in regards to just how far this is going to go, and really the benefits are obvious. But I think in some ways, like if you look at the internet when it initially came around, nobody quite envisioned how we'd be using it. Scrolling on whatever, looking at pictures of dogs and stuff like that would sort of engulf humanity. I think maybe there's something hopefully a lot more productive coming out of all of this, but in regards to where this is all going to go, it's exciting to say the least. I think, and you talk about getting access to capital or liquidity that's going to enable entirely new markets. Actually, with the programmability of these tokens and smart contracts, the efficiency for markets really improves. I spoke to someone not that long ago that spoke about the 2008 financial crisis and how a lot of that could have actually been managed better due to sort of automation that comes with tokenization. We're talking about systemic risk kind of being put to one side. Sorry to cut you off there.
No, I was just thinking actually, a lot of the reason around sort of the contributing factors to the great financial crash were around not knowing what sat inside these junk bonds, these mortgage-backed securities. Whereas, if you had the transparency, which is what I was talking about with that third product, the sort of proof of reserves piece, ChainWiki, you could see exactly what is sitting behind the data of that token, and also importantly, who is attesting to the veracity of that data. Traditionally we've relied on third-party auditors to do that, but then we've seen there's been so many sort of scandals and things that have come out around those organizations. So if you had a more diverse or decentralized group that were all attesting to the veracity of this data, then surely that sort of group consensus is going to far outweigh just paying one of the big four to go and do it for you.
Yeah, absolutely. And it kind of opens up markets to be possible, if you have that kind of transparency. If you look at the carbon credit market, for example, it's really suffered. I mean, there's stories of people buying the same tree 1,000 times over, right? Because nobody can actually, I mean, these are like legit stories. They sound really funny and comical, but they're legit. And actually you're opening up entirely new industries that can be tokenized, will be tokenized, and, benefit, I think, the world as a whole. And that's very interesting. And talking about kind of data, what perhaps are some of the interesting ways you see, you mentioned that third product that you guys are working on. What are some of perhaps the interesting things you see data being used in coordination with tokenization? It's interesting because Howard Lutnick, the sort of commerce secretary in the United States, he put the GDP of the GDP figures of America on the blockchain. And that kind of fundamentally changes markets in the sense that now markets have direct access to data instead of an individual like myself having to make a call based on data in the real world and then input it into the kind of digital one. Now there's that kind of stream directly into it. What are some of the cool things or examples you see kind of coming out of that?
So we think having that data valuation or data veracity piece solved at a very foundational level actually then enables you to do a lot of cool stuff on top of it. The
Yep.
idea of data or the truthfulness of data, not the sexiest topic in the
Yep.
world, but actually, if you get it right, it then gives you the license to go and do a lot of sexy things with it.
Yep.
Well, it depends on what your definition of sexy is. But anyway,
Yep. We'll keep it
um,
PG.
yeah, exactly. So one of the thing, or there's a couple of different things that we're looking at. So I've already mentioned that it's a decentralized platform. It's called ChainWiki. It enable people can go in and they can sign messages that help attest to the truthfulness or the source of data that say is backing up an asset. And I think the first instance where that becomes really important or interesting is in the context of making private markets public facing. Private markets, huge untapped potential there for new asset types coming on chain, and then also liquidity being able to enter the market. But the cost of the due diligence process around assessing what an asset is, whether it's a fund, whether it's a piece of real estate, then also assessing whether the value of that asset is you agree with the value of what you're being told it's worth. And obviously, a lot of true value only comes from when you have when you have a price discovery process, and that requires a lot of people to be involved in that. So by getting this data valuation piece right, and then ongoing monitoring and assurance as well, because you can't just assess it once and then that's that. You have to have an ongoing structure for that, for making sure or assuring that that data is correct. Once you have that, I think then it's going to be able to bring these private markets into a more public facing domain, which then more people can get involved in. So that's one benefit of having this data piece. And then I think as a step on from that, or the second piece to add to this is it isn't just a buzzword anymore. Like agentic AI is happening, and we're seeing some real developments in the space of people building, these incredible AI agents, investment portfolio management AI agents that you can say, here's $10,000, go and invest in a stock portfolio that is US tech stock base and rebalances quarterly. Unless that AI agent has access to information on chain, it is not going to be able to do that. So by having this data valuation piece and making sure that everything's available on chain, that AI agent can then react to any changes that are made within that. And I think that's like the cool stuff that for me, that's the sexy part.
Yeah, we're moving into, I think, a new reality as far as markets are concerned. And again, I think comprehension. I mean, I often, in a sad kind of way, spend quite a lot of time thinking about all the ways this is going to change the world. And some of them are weird and wonderful, some of them are sexy, some of them are not. But there's a major change taking place. Distributed ledger is at the heart of it. I always like to think of these things as real enablers, like prior technologies. And one of the best things I've ever heard somebody say about distributed ledgers is that if we had them from the dawn of humanity, history would look totally different. And that just kind of, I guess, is credit to how important they are, in terms of being a truth source, in terms of being a kind of a watchdog, as it were, for the world as a whole to ensure honesty, transparency, and all these things. And of course, markets need that, and what you guys are doing is a big part of that. One thing I think about, and I know we spoke about it a little bit off camera, was dividend. So if you own stocks, a lot of stocks pay out dividends. How perhaps do you see that changing with a lot of the reasons dividends are paid out in the manner that they are is due to costs, due to sort of efficiencies with the market as it is. And we know that markets aren't that efficient, right? As they are. They work, but there's a lot of kind of clogs that don't need to be there behind the scenes. How do you see something like dividends perhaps changing, and you guys maybe enabling that change with some of the equities that you offer in the form of RWAs?
So I think your comment about, markets used to be efficient, but now they're not. I think a large amount of that is the sort of the bureaucracy and the sort of red tape that comes with enhanced regulation, which was a direct component or subsequent component from the great financial crash and the fallout that created, and rightly so. But I think now what you're able to do is with tokenization and blockchain or DLT technology is actually you're able to automate a lot of those processes. So in essence, take out a lot of the fat that has been imposed throughout the years. So actually, when people talk about tokenization, it's less of a sales play and more of a compliance play. Because you are actually able to automate and streamline these processes far more efficiently. One of the things that we're building for with our tokenized assets, because we're always building with scale in mind, even though the RWA industry is relatively small today, is how do you solve for dividend payments? And the way that we're actually doing it is building out a separate yield token so that we can separate the principal position from the yield. So in this case, it would be a dividend. And then what that then enables people to do is actually do something with the interest or with the dividend payment that might be separate to what they want to protect with their principal position. And you could actually take that model and then apply it to myriad use cases, not just paying dividends, but actually looking at yield-bearing stable coins, for example. In fact, I think we'll probably see that use case first before we see the dividend payment use case, just because the stablecoin industry or sector moves first in real world assets, and then you see it trickle down to other asset types. So that's the first thing I think we'll see. And then the second thing is that automation actually enables you to pay that yield or distribute that yield actually in a far more regular way. So at the moment we see annual payment or dividend payments. It could some cases we're seeing it could go to quarterly. With this, I mean, you could do anything. You could go right into the minutia. So you could do quarterly, you could do monthly, you could do weekly, daily, you could do hourly. You probably wouldn't want to spend that much gas costs on making like hourly or even minutely payments. But it is possible. And I think that's the point we're trying to make here.
Yeah, again, it really is in line with sort of the theme here of there's a kind of evolution and major benefits coming to markets, and it's extremely interesting to kind of see or imagine all the possibilities. I think one thing that people are really interested in when it comes to real world assets and traditional assets coming on chain is the further kind of utility of them in regards to how you can use them. So DeFi is kind of a crypto native thing. Sometimes it mirrors traditional kind of products, but it's something really interesting. And DeFi, I think, with traditional finance is going to merge and create all these new products. What are some of the things that you guys are perhaps looking at or envisioning or see coming in the future in regards to how some of these RWAs, like some of the tokenized equities that you guys have, what are some of the kind of DeFi uses perhaps that you see coming out of that?
So I think the major thing for us is that, or the sort of main idea we had was that DeFi has a collateral problem, in the sense that most of the collateral that exists today within the DeFi landscape is highly correlated. So when Bitcoin sneezes or catches a cold, everything else sneezes,
Yep.
right? So that's why introducing real world assets into the DeFi landscape is particularly important for having those uncorrelated asset classes. But B, gives people more of a safe haven other than just providing access to stable coins for when markets do start to go into decline, which inevitably all markets do because they're cyclical. So what happens after this next bull run? Where do people park their money? Well, maybe not everyone wants to move into a USD denominated stable coin. Maybe it's they want to go into gold, or they want to go to in stock, or perhaps they just want a diversified portfolio to begin with, because that just makes good trading sense. So the first sort of use cases we're seeing interest in these assets for are people who are looking to manage or have smarter ways of managing their treasuries on chain, and crucially not having to move outside of the on chain world in order to get that diversified exposure. The second piece is around lending and borrowing. So we actually already introduced lending and borrowing against our gold tokens. So you can borrow, and again, because they're a more stable asset class, you can actually command or demand a higher loan to value. So it's 70% at the moment on our gold product, but there would be scope to increase that because gold holds its value so well, and if anything, it's actually breaking all-time highs at the moment. Yep. We plan to introduce that on stocks and shares. The reason we haven't launched that just yet is crucially, and again, not a sexy topic, but a very important one for the foundation of lending and borrowing in DeFi, is around automation. So the way that we have structured our product, our tokens, because they are not synthetic, they are real world backed assets, is we have to go and buy those from the traditional markets. What we've been building and are very close to launching is automation, whereby a smart contract on a network like Hedera or Ethereum or Polygon can actually trigger a buy or sell order in traditional markets. And we haven't seen that done anywhere yet before. Wow. The reason that becomes so important for the lending and borrowing ecosystem on chain is because we are used to, in DeFi, having instant settlement. And if your position becomes liquidated, you have to know that you can get those assets. So that's why we've waited to launch anything on the lending and borrowing side for tokenized equities until that piece of the puzzle is complete, of which we are very close to that happening.
Wow. It's a very interesting future. Certainly you talk about gold. Gold's obviously doing very well. I think there's sort of shifts going on around the world in regards to how people perceive value more broadly. And the kind of unlock that tokenized gold can bring, people every gold bug I've met wants to hold on to gold forever, right? They don't want to sell it, but they want to sort of perhaps maybe realize liquidity at times or, go and get interest on it. This is all made possible with what the likes of you guys are doing. Obviously, we're going to put links to your website in the description where people can, of course, go and check all that out. And to go back to a comment you made earlier about how small this industry kind of is right now in regards to real world assets, depending on what source you look at, some have the total market cap of real world assets at 16 billion, some have it in the 20s. Let's say even if it was 30 billion, markets that can be tokenized are in the hundreds of trillions. Certainly when you talk about those markets that haven't even been enabled to become markets. Could you maybe give a comment on that and just how early we are in regards to this trend? And I think testimony to you guys in regards to spotting that and being positioned for it.
Well, on that, so obviously our sector is very hot on TVL. And when you're having conversations with people around, the strength of a product, whether that's maybe a listing conversation or otherwise, they always want to know, they think high TVL figures mean that they obviously back the product, right? It's got a lot of money sitting behind it. So when they ask us about, well, what's your TVL for tokenized Apple? And I'm like, well, 2 trillion, because what's the size of Apple? Because technically, because of this automation piece, we're giving access to virtually unlimited liquidity off chain to everyone on chain because of that connection. And that is a really crucial piece for people to understand.
That's interesting. I don't think I've thought about it like that myself. If you talk about the kind of TVL of tokenized assets, it's kind of the value of those assets, because now we're at a stage where they can be tokenized, right? And that is literally unlimited liquidity.
That's if you have that connection piece sorted between the two worlds. If you're just looking at a purely synthetic model, or you don't have it, it's not easy for you to redeem or have that exit liquidity for redemptions to get out of your position. then it's a little bit trickier, because then you are kind of you have to succumb to what the TVL is or the on-chain liquidity is. But being able to connect those two, you're golden.
Yeah, pardon the pun.
Yeah,
Let's talk about something that we've absolutely got to cover, and that is Hedera Hashgraph. Hedera Hashgraph, I've been in crypto since the days of Namecoin and some of the others out there since 2012.
cool.
And with my kind of evolution of understanding the cryptocurrency space, I have a few favorites now. Hedera Hashgraph is absolutely one. It's very tribal in crypto, so I don't want to start any wars. But let's perhaps talk about Hedera Hashgraph and why you guys have chosen it as far as sort of enabling compliant stocks with it. Why did Hedera Hashgraph kind of appeal to you guys?
Well, we have to be network agnostic. There are
Of
no
course.
favorites. Okay.
Yes.
It's like, a parent trying to choose their favorite child. We love them
Yep.
all the same.
They do have
Um,
them though.
Everyone has them. Yeah. I'm not there yet, but every time I
Yeah.
meet a parent, yeah, they always have them. Anyway, I digress. Why did we choose Hedera? So Swarm is EVM compatible. So we can launch on any chain. In fact, we're already on Polygon, Ethereum, and Base. When picking a new chain to go to, there are a few kind of factors that we do assess. Mainly, what is the ethos of the chain, and does it sort of align with our own? And one thing that we're very set on doing is making sure that we build out these tokenized markets in a regulatory compliant way, and Hedera very much matches that ethos. So that was a huge important thing for us as important factor as to why we chose Hedera. But they also understood that where the markets are going, and they liked the model through which we were enabling access to these assets, not least through which we're creating a redemption pool with the foundation, whereby people will be able to instantly redeem their assets rather than having to wait the T+2 or T+1 settlement that you traditionally see in traditional markets. Again, we're a hybrid that tries to straddle both markets, so satisfying the compliance for both, or the expectations for both, becomes quite interesting, and redemption is certainly one of those things. And it's also a very user-centric way of implementing or enabling these assets, which Hedera definitely recognized and said, yeah, we want to create this for users so that they can get all the benefits that they're used to within DeFi, like instant settlement, but whilst also being able to leverage assets that aren't available in DeFi yet.
Yeah, I think there's a lot of reasons. When I say Hedera is one of my favorites, I do have other DLTs out there, and it's going to be a multi-chain world that we live in. It's kind of crazy to think, and there are people out there that do think that one chain will do everything. I don't think anybody would want that. You talk about a sort that's kind of very totalitarian, and once you have that innovation, I think competition is good. And Hedera, I think, is ahead of its competition in many ways, and there seems to be a theme with it. In regards to people looking perhaps to tokenize on it, to launch stable coins and things like this. They're very well positioned in regards to this kind of evolution of markets and enabling it and being the rails upon which a lot of it takes place, I think. But there is going to be multiple chains, and there's some amazing projects out there that are doing amazing things. And I know you guys are sort of chain agnostic in regards to what people want and how things are conducted. One thing I'm really interested about, we've spoken about some of it already, Katie, is what the future looks like for you guys. You guys are absolutely trailblazing at the moment. Again, really at the forefront of this kind of evolution that's taking place. What are some of the things that you guys have got coming in the future that you're excited about?
So I think the main things that we're focusing on are working with other chains to look at how we tap into more communities or more people being able to access these assets. So that's the first thing. So you can expect more news announcements coming in that vein. In fact, we even announced today that we've enabled our DOTC, so our trading platform on the BNB chain. And even with that, it doesn't just mean you can only trade Swarm's assets. You can actually trade any asset on the chain that we have enabled that infrastructure on, which means you can do large block trading without any slippage, because you can either fix a price or for the asset, or you can do dynamic pricing that moves with the market. So that's a really cool function that we're enabling on different chains. And then we'll be looking at adding more assets. So at the moment, we've got about 7 publicly listed stocks. We've got 2 US treasuries that yield 5%, and then, of course, the gold. And we're working with different projects in the space to add new assets, publicly listed assets, I might add. So we benefit from something called prospectus regulation in Europe, which means, which again, not a sexy topic, but it means if you have prospectus regulation, it means you can offer these assets to both retail and institutional investors, which again sets us apart from a lot of the other RWA protocols in the space who can only service institutional or sophisticated investors. So we're looking to add more assets to our prospectus, which then will enable trading in more assets. And we choose to add those assets based on demand. So if we've got projects coming to us saying, yeah, we've got a capital requirement or ready to deploy into X, Y, and Z assets, can you add them? Then we're able to do that in a pretty quick time frame. Actually, it's about a couple of weeks. So it's quite nimble. So more assets, more chains. There might be a couple of other surprises thrown in, but I have to keep strum for now on those. But maybe we'll come back in about a month or two and can talk to you about those developments.
Yeah, absolutely. We'd love to have you back. And like I say, what you guys are doing is truly magnificent. I think it's going to change the world as we know it. You know, that's a big statement, but I truly believe it. And we're going to leave. Absolutely, we're going to leave links for sure. We're going to leave links to where you guys can be found, social media, you know, talking about those announcements that are to come. Guys, do go and interact with them on social media. Go give them a follow. Katie, is there anywhere you want to kind of push people that want to stay up to date with all of this?
Go to our Twitter at Swarm Markets. That's probably the best place where you'll get all of our updates. We also have a group on Telegram for SMT, which is our ERC20 token, which actually the trading fees from the trading platform I mentioned, DOTC, they don't come to us. They actually go into a smart contract, which anyone can then trigger a buy and burn of SMT. So the more trading volume on that infrastructure leads to deflationary mechanisms on the coin as well. So that is another way that we're actually driving value back to retail investors who hold that token. So check that out as well.
Fantastic. Katie, I've absolutely loved interviewing, and I just want to say a massive thank you for your time. Hopefully we'll see you soon.
Yeah, definitely. Thank you for having me. It's been great.
Thank you, guys.